Welcome to another Ronel Talks Money show. Now, today we have an amazing guest on the show, and he has an amazing story to share with us. So I'm really excited to have, I don't think I pronounced it completely correctly, but Nqabenhle, I'm really excited to have you with us today. And when I've learned about him, I realized we have a lot in common. We both are chartered accountants. We both love running, and we both love investing in property. He is just way ahead of me, and I don't know if I will ever catch up with him. He's obviously has a huge success story, and he's here today to share with us more about it. So thank you for joining us today.
Thank you. Thank you very much for the invitation, Ronel. I'm truly honored to be here.
Awesome.
And well done, by the way, by the good work that you're doing.
Oh, thank you. I appreciate it.
Yes, yeah. It's quite informative.
Yeah. And okay, just before we start, maybe you must, because you invest so quickly, I don't even keep track. How many properties do you own now?
Sure, just above 100.
100. How impressive is this? But he will share with us all about it. So I think before we get into all of this, first you can maybe just tell us a little bit more about yourself and your journey basically before you started investing in property.
Okay. Sure, must try and think back. I was born and bred in Newcastle. So I'm a KZN boy. So I studied there and until high school. Then I moved to University of Nepal, where I did my undergrad, and then I finished it at UNISA. So when I was looking for a job, then I had to move to Johannesburg. That's where I managed to find a job and did my articles with Ata Anderson, then Ata Anderson, and then I got tired of audit. I didn't enjoy it at all. By the fifth year, I stayed there for 5 years. So by the fifth year, I was bored like crazy, because I didn't like routine. I realized that I don't like routine. And as a result, by doing audit, I realized that I don't like being a financial manager as well, because there's a lot of element of routine, like on the first to the fifth, doing this, and then on the fifth, doing this, and then the cycle starts again the following month. So I had to try and think, what else can I do then? So I decided, wait a minute, I've done tax, as part of my education. Maybe let me go to tax, because tax changes every year. It won't be the same, So I moved to SARS. And then at that time, I think they had what is called Corporate Tax Center. They were just establishing Corporate Tax Center during the times of the then minister, what's his name now? Joran. So I've forgotten his name now. But yeah, I joined Corporate Tax Center, and then I did tax for 2.5 years. I thoroughly enjoyed that experience. But then in that 2.5 years, I knew everything there is about the tax legislation. I happened to be auditing banks when I was there. I got to get the banks to draw the line and start paying their taxes. So I created problems for the banks. And then they said, you know what, you created problems, come this side and sort them out. So I moved from SARS after 2.5 years later. So it was mainly because of bureaucracy in SARS, and was taking time to take decisions, and stuff like that. But I enjoyed that experience. Then I moved to Standard Bank to come in and fix whatever problems I created for them. Initially, I was in a internal audit division, where basically I had to set up the tax audit processes for the bank to make sure that somebody who audit that the compliance is okay. And then 6 months later, I was bored. Audit is audit, whether it's external audit or internal audit. I told them, look, I can't do this. But then it was at the time when Standard Bank was expanding into Africa. And then we were buying a whole lot of businesses in Africa. We had presence in 16 African countries. Then I had decided I must move into tax. and go and set up the tax management processes in the African space. So I did that for it took me 4 years to fix everything and create relationships with the tax advisors there and all that. And then 4 years later, I was tired of it as well, because like you build it from scratch. Once you see it operating, for me, I get bored again, because now it's operating, it's efficient. I had to look for another challenge. It was around 2008. So I wanted to go to private equity. Everybody was talking about private equity, and you can make a lot of money there. So I tried to move to private equity, but then it was June 2008 when the meltdown was happening. They said, no, we can't be, we're not hiring anymore. So, but go and we like you, but go and do property, because there's still deals that are being done in the property space. It's similar to private equity. And then once things turn around, you come back and join us. And that's how I was actually introduced into property. So I enjoyed that. I joined Standard Bank Properties, and I thoroughly enjoyed it. I was hooked. The property bug hit me, and then I've been in property since then, from a work perspective. And yes, I am a CA. We're thrilled to be risk averse as a CA. If somebody comes and presents an opportunity, what do you think about where can it go wrong? Where is the risk? And you can find 20 risks and never focus on the benefit that you can get from it.
Amazing journey, and just kind of interesting to see kind of like in how everything flowed up until where you are today. But what made you decide to invest in property?
Okay. It was when I was still working for Standard Bank, and while I was still in the tax department, I was doing an introspection as to what is it where am I going? Where is my career going? So what is a career path for me? So then the thinking was that you must grow and get into senior management, into exco, and probably be a CEO of an organization. Okay, and I happened to be at the Standard Bank when the new team was taking over. It was during the times of Jaco Marie, Sim, Shabalala, and a number of them were taking over the bank, the youngsters. They were 38 at that time. I remember very well because we're in the same floor as Jaco Marie. And 2 years later, Jaco Marie was gray. I remember very well, his hair was black. And 2 years later, he was gray. And I will see them running up and down and working until late and stuff like that. I could see these guys are stressed, and I thought to myself, I'm a bit more family oriented. I love spending time with my kids, and stuff like that. I don't want to go that route. Fine, there's a lot of money. You could see how much they were earning because you got access to the financial statements, but I thought this is not my career path. I can't be going to become a CEO and stuff like that. It doesn't fascinate me at all, So, but how else then can I make money, because if you remain as a junior, you're limiting your capacity to earn, So in that journey of trying to figure things out and what else can I do? And then I was trying shares at that point in time, and then things were happening and I just couldn't make my own shares, and then I discovered this property journey, in fact, you can invest in property. And then I fell in love with it, It was before I actually moved into property. I started investing, and about 2 months later, by fate, then this property thing was present to me. So I moved into property from a corporate point of view, and I also started my property journey at the same time. That's basically how I got into it, with my just trying to see the alternative investments, because at the same time I could see that pension won't make it. You won't sustain your life pension. And I analyzed also the funds, that were there. I realized that the returns that you get there, they're not that great. The Stanleys, the Allen Greys, and stuff like that. For me, you can't really make something meaningful there. So I discovered property. That's where you can make money, and then I started the journey of investing in property.
Tell us that first property that you bought. Just tell us a little bit more about that.
Okay, maybe I'll take a step back and tell you how I got into it. Okay, we were coming to church with my then wife, and her friend decided to come and join us. We had lunch, and then I left them as ladies to chat and stuff like that. As we were walking out into the car, this lady mentioned something to my wife and said, "Look, there's this book that I discovered. You have to go and read this book, my friend." And stuff like that. I'm there listening while they were talking, and she said, "This book is Rich Dad Poor Dad." It was around 2:00 on Sunday. Okay, I decided to go to Cresta to go and look for this book. It just stuck in my head that I must go and look at this book. And I was not a reader then. I think before then I only read 2 books. One was the Mandela story. It took me 8 months to read that book. That's how much of a non-reader I was at that point in time. So I went to Cresta. There's a coffee shop. I can't remember the name of the coffee shop now, but next to the book shop, next to exclusive books. Took the book and read it while in a shop. After reading the first 2 chapters, I was hooked on it. I said, "Wow, this is a great book." I decided to buy it when they were closing the shop at 5. It took me 4 days. I bought that book on Sunday. By Thursday, I was finished. I was finished with it. I was like so hooked that this is what I need to do. And then on Saturday, I went shopping. I went shopping for a property. The following week, I did my first deal. Okay, so that's how impactful it was for me. I thought this is what I've been looking for, and there it is. Let me go and get into the property journey. Bought my first property, which was a townhouse in Windsor East. Got it for 80,000 rand, and was renting it, I think, for about 3 grand. Okay, so that was the most exciting thing for me, and that's how I started my property journey. Okay, I remember that the property transferred around the first week of Jan, and then I realized there's something called tenant, and I thought tenants would just come. I didn't know how to look for a tenant, and I was like, I wrote a board. I remember I took a marker and wrote a board and put it in front of the property. Nothing, and I didn't have money. I didn't have money. It was during those times when you could get like 100% bond on a property. In fact, 110%. They even paid for my transfer fees and all that. I didn't have a cent to pay for that bond. No cent. So I was 600,000 in debt at that time. I was busy servicing debts and not having extra income and not saving at all. So I was scared. What am I going to do now? My first installment is coming up at the end of the month, and I don't know how to get it. The tenants are not coming. And then while talking about my stress at the bank, and then somebody said, "Why don't you put it on the Business Day?" I think Business Day then had the advert, so you advertise for tenants at that time. I said, "Why don't you put it on Business Day? Or the Star, not the Business Day, sorry, on the Star." And I put it on the Star. I got 30 inquiries. Okay, and then the person said, "Okay, fine. Do you have 2 months deposit?" We're asking for 2 months deposit. Yeah, for 2 months deposit, paid 2 months deposit, and then got the rental upfront. So I had 3 months now. I thought, wow, so I'm covered for 3 months now with my bond. If the tenant moves out, I've got 3 months on my bond. I remember that experience so well because it was nerve-wracking for me. So I think it taught me to manage risk, to make sure that you've got enough in case the tenant leaves. The promise you've got enough. Don't chow all the rent. Keep sufficient to be able to service service the bond in case there's a problem.
It's such an interesting journey, and I think it is always interesting to know kind of what is almost that trigger point that almost sent you on a certain journey. And for you, it was obviously reading Rich Dad, Poor Dad, and it just had that impact, and there you went off. And I think apart from that is also to learn from that experience, in the sense that, you know, if something is kind of meant to be, you will find a way to make it work. And you obviously did that. And I think because you also, I know you invest, I think mainly, I don't know if it's exclusively in Johannesburg CBD. So just tell us a little bit more, why the CBD?
Okay. I was lucky in a sense that I'm a CA. There's always pluses in being a CA. So numbers come naturally to me. Okay. So my drive and my idea of investing is not the love of property. It's maximizing my return, you know. So that's my criteria. I need to maximize my return on my investment. For me, there's no point in buying a property and you have to put in money on it on a monthly basis and hope for an increase in value into the future and make your money then. Okay, I want to make my money now. Okay, if I take out $100, I need to get back something. You know, if it's 10%, I need to get back the 10 rand by end of the year. If it's 20%, I need to get back the 20 rand by end of the year. Okay, so my investment philosophy is that I need to make more than all the alternative investments. Okay, so my first property, I was making about 15% return. Okay, but the prices started shooting up. You know, I bought my second property for 100K. My first one was 80. Bought my second one for 100K in the same area, in the Windsor East. My third one, it was 120. My fourth one was 140, and then my fifth one was 200K. Okay, and then it increased so much so that it didn't make sense to me, you know, to continue buying, because then my return came to about 10%. You know, and I wasn't prepared to put in my money in property and then get 10% return, you know. So I stopped, you know, and I started looking, what else can I buy? It so happened that the guy I was working with was staying in CBD, Johannesburg CBD, and he mentioned that there's opportunities there. You know, I said, what? He said, no, there's plenty of opportunities. You know, he started buying into property. In fact, I influenced him to start getting into property. But he bought where he was staying, which was CBD. You know, the banks owned some properties and they wanted out, and then he started buying. You know, so I got there and I found my first property there for 20 grand. Okay, so like 20 grand, 200K. Now, you know, you must put in my other philosophy investment that you must put in the minimum amount. You know, and then try and maximize the return. You know, so there's a property there, and I was gonna get 30% return. So I thought this is no brainer for me. Okay, so I started buying in the CBD. That's basically how I got into it. You know, but it was by pure chance. You know, and I'm still there even now because I can't justify moving away from them. For example, all my properties, I recently started getting returns of about 14% recently because the prices have gone up. But majority of them, I'll say 95% of my properties, they're above 20%. Okay, so for me, it makes sense. It's purely because of return versus the amount that you invest. Basically, that's why I'm in the CBD. I can't get that in townhouse. I can't get that in Sentin. Can't get that anywhere. So I'm not into property for the beauty of property. I'm in it to make a return.
The numbers should make sense, and that's why they always say you shouldn't get emotionally involved when you invest in property. You know, you might think, okay, now, you know, I don't want to go to the CBD. It's maybe not safe. It's maybe not this. It's maybe not that. But at the end of the day, if the numbers make sense, that is what will drive the returns. But then you must also just share with us, how did your journey in property then evolve from buying that first property to where you are today? Because I think you bought your first property in which year?
Around 2009. 2009, yeah.
It's about 12 years now.
Yeah, it's 12 years now, yeah.
Yeah. So how did you go from one property to about 100 properties in 12 years?
Yeah. It's sure. It's been a very, very interesting journey. Okay. I sort of like realized that there is freedom. There is a potential of financial freedom. Okay. My thing, initially, I just got involved with the idea of just investing, but then it involves, the book talks about financial freedom. And I thought, you know what, let me really scale this up. Let me scale this up. And the idea was to replace my salary. Okay. So the motivation was to push, buy as many properties as possible until I can replace my salary. Obviously that involves a whole lot of sacrifice, in a sense that I couldn't upgrade my car. I have to keep the car that I have, while people thinking that after 5 years you need to change your car. I'm saying still driving well, there's no issue in it, so I'm gonna keep it. In fact, the installment I was paying on a car is coming back to me. It's more money to invest in property. I went aggressively, so when I get a bonus, I'll take 10% of that bonus to enjoy. The 90% is going straight to property. When I get increase, I'm not upping my standard of living. I kept it the same. I stayed where I was staying. People will come to my house. This is a CA staying here. But in my mind, the biggest drive was to replace my salary. So then at that time was earning around 28,000 rand, 30,000 rand. So the idea was to just build properties that will give me 30,000 rand. Okay. So I did the sum. I said, okay, fine. If I can just have 30 properties, just 30 properties, then I would replace my salary. I didn't think about the fact that salary will increase, and then I might have to adjust things. So my idea was 30 properties. Each property gives me a net income of 1,000 rand. That's 30,000 rand, I'm saying. Okay, so that's how I went aggressively for it. So I achieved that with 21 properties, because I was getting more than that on some of majority of the properties. 21 properties I was there, but then my salary had moved there, so I had to readjust the goal. As the salary was moving, I had to readjust the goal. As I was climbing the corporate ladder, I had to readjust. So that's how I end up getting more than 100. But at some point, then the properties reached that goal, and I was happy.
You realize that once you have that bigger vision or that bigger dream, you are willing to make certain sacrifices, because you understand that you know where you are going to, you know where you are heading towards, and you are willing to make certain sacrifices because of that something bigger that you have in mind. And I think that is, I think there's so many lessons to learn in that, in terms of, just keep your standard of living kind of within your reach, and rather, invest and make something much bigger for yourself. But I also want to talk to you a little bit about risk. You have mentioned it. But if you think about accountants, by nature, accountants are very risk averse. So quite often you would think, okay, to go into investing in property, like you said, you were at that stage 600,000 in debt. Now you're actually going to have more debt potentially, and it can backfire on you. So how did you overcome that initial fear? And I think also together with that, how do you mitigate risk?
Yeah, sure. That was the most difficult part. Yeah, as an accountant, you'll know that we are being drilled, like to be risk averse, like it's just part of the system, So it was really more difficult. To be honest with you, it took me 3 years to get over it. I decided 3 years before I actually bought my first property to invest in property, to look for other opportunities of investment. So each time the opportunities come to my way, I will analyze them and look what is it that can go wrong. I'll always find 10, 20 things that can go wrong. But I never look at it from a different perspective and said, what is it that can go right? So to adjust from moving from what can go wrong to what can go right, it took me 3 years. Okay? I was so scared in that 3-year period. Each time I think of doing something, the fear and what can go wrong, will like flash into my head. It was terrible. But I think the book that sort of like did it for me, which is a book that I read just before I read Rich Dad Poor Dad, was Breaking My Virginity by Richard Branson, the story of Richard Branson. Like that book was amazing. Like that's the one that started the journey of thinking of possibilities. How can one man, have 400 companies, and all successful, and at the same time still have fun and enjoy himself and have time for himself and his family. So that book started it for me. So like there's possibilities. So there it states clearly that he always look at what can go right and focus on solving the problem, rather than looking at what can go wrong and be scared and be, focusing on fear. So reading the books for me did it, and starting the journey of personal development and understanding me, and understanding that I'm a radiant being of light. I can be powerful. Like the power is within. It doesn't matter what happens outside. As long as you grow yourself, and grow the belief system that you can make something happen. You can make anything happen. Whatever it is. So that has been the principle that I've been living with all my life. So, and I constantly challenge myself. And then from a risk management, I believe if you do something with love, and if you do something with the bigger picture in mind, with the bigger vision, you to pay attention to it. Okay. So for me, I thought like I'm in a market that is underrated. Let me provide a service, good quality service, even within the market. So my idea is that I must take care of my tenants. Okay, I mustn't just focus on making money. I must provide value. Okay, so as a result, if something breaks, I'm there. I've got a team that stays in my properties that service them. Within the day, we'll be there and fix it. Okay, I didn't think about it at that time that people notice. The tenant notice. As a result, I never had vacancy. I never had vacancy until COVID hit. Before COVID, I never had vacancy. I never had a bad debt. I had lost 500 Rand throughout pre-COVID. And that was the guy lost his job. And he told me, look, like I can only pay this much and I'll leave at the end of the month, but I don't have the 500 Rand. That's how I lost that 500. But before that, never ever. Okay. My first 10 tenants in Hillbrow, they are still there even today. In fact, I was with one this past weekend. So they've been with me for more than 10 years. Why? Because of the service that I give to them. You just have to be there and be present. They must feel your presence when something that needs to be attended to, you attend to. So I found myself in a situation where if the tenant leaves, I don't even advertise. There'd be a few of them who said, no, we want to move to a flat. I've developed that reputation that we want to move into the flat. You find out like tenant at number 10 leaves, the one at number 11 will move to number 10. So that's basically how I manage risk, in a sense that just provide a good service, then you won't have an issue of a tenant not wanting to pay you. You won't have an issue of vacancies, and then you manage risk in that manner.
That is actually proof of once you have good knowledge about something and you combine that with a powerful mindset and the right mindset, you can only achieve success. Now, you've already mentioned to us that your background and your knowledge of finance and tax and that definitely helps you a lot within your investment journey. But what is to you the most important calculation that you will do to ensure a property deal will be a good deal? What is that one thing that if you can tick that one, you can go ahead with the property deal?
Without a doubt, net return. I don't care about the rest. For me, it's net return. I see, people advertise properties here and say you're gonna make a return of so much, but they're talking about gross. For me, that doesn't do it. I need net return. If I put $100, I need $20 by the end of the year in my account. Not value created. Value for me is a plus. I don't care about capital appreciation. Although people think that the capital appreciation is incentive, I bought my first property for 20,000 rand, as I said. I can sell it for 350,000 today. What percentage capital return have I got? So that's where the capital return is, and that's where the net return is as well. So my criteria is net return. Anything less than 15%.
Kind of what the benchmark is for you. And I think sometimes it also differs from people to people or from person to person, depending on what their goals are. But I think the one important thing that I also want to get your view on, did you make use of external funding? Because I know that is quite often to a lot of people a big obstacle, and people believe, but I can't get funding. But you said you did get some 100%, sometimes even 110% bonds, even though you were 600,000 in debt at that stage. So maybe you can just share with us a little bit your view on external funding and what kind of advice can you give to other potential investors?
You can never grow anything substantial without funding. Although in my space you can still do cash deals, but you need debt. For me, it's a combined debt and cash. So I'm in a better position now, in a sense that all my properties are cash positive. So I do get a lot of cash on a monthly basis, and I take that cash and plow back and do cash deals. So I normally do cash deals, and then go for refinancing. Do cash deals and go for refinancing. That's how I grow my portfolio. But the other craziest thing that I've done for me, initially, because initially banks were skeptical to fund in Hillbrow or in a CBD. So initially when I started, I used to do those deals cash. If you're getting a property for 20,000 rand, you can put together 20,000 rand. But the debt that I used was my credit cards. So I had plenty of credit cards. Even now I've got 5 credit cards that's got 700K in them. So but I use those credit cards for my property investing. So I will take my credit card and then buy property, use the rent that I'm getting to pay the credit card, and also take my savings and pump into the credit card. So in that way, you're paying it faster. And as the bank see that you're using a credit card, you using it and then paying it faster, they keep on increasing it. So that's how I got to build a debt capacity of 700K just on credit cards alone. So you can do that. So but you do need debt you can never expand significantly with that debt. And besides that, debt gives you a better return. Okay, if you've got for example, if you've got a property that is worth 100K, okay, and you do have cash of 100K, instead of taking the full 100K and buying that property, you rather put 20K and get the debt of 80K, and then in that way you can have 5 properties. Put 20K, and then instead of buying one, you've got 5. Okay, and then if the numbers work out, and for me everything is always positive. After servicing the bond and paying the levies, I'm still left with something. So you find that your return on your 20K, it's in excess of 20%. Most of the time, that's how you maximize your return using debt. So debt is good, but it has to be a good debt. I don't use my credit card for holidays and stuff like that. It's always for property investing. The moment there's capacity, I look for property, I go and buy. The moment there's capacity, I look for property, I go and buy.
About the credit cards that you are sharing with us. So thank you for sharing that. And I think that is definitely something that investors can go and investigate, because it's probably a lot easier to obtain that type of funding than a bond or something, and a lot less administration. But
and revolving credit, by the way.
And then you have established I don't know how you pronounce it, the Masibambizani Property Fund one about 5 years ago, and I know you also recently established another fund. So maybe also just tell us a little bit more about that. What is it all about? How can people get involved?
Okay. Yeah, Masibambizani Property Fund, how it came about. I never intended to have a fund. I've always been investing for myself. And then like 5 years ago, I got an opportunity where somebody came to me and said, we understand you buying property, because I'm concentrating, all these properties are in 6 buildings. So I'm concentrating on buying individual units, but I'm focusing on few buildings so that I can take them over. And I just bought 2 properties in a building, and then somebody heard about me. And then they say, look, we've got 45 properties here. We want to exit, and then can you buy them from us? And I didn't have capacity to buy all 45 properties, but I thought, sure, this is an opportunity to control this thing. I could only buy, I think, 10 out of the 45, and then I went out and told my friends and my family and said, guys, there is an opportunity to buy property. Why don't you give me the money? I'll buy the property for you. And then I'll manage it for you. Don't worry about management and stuff like that. But so firstly, I went to those guys and asked for an opportunity to raise money for 3 months. You must give me 3 months. In 3 months, I'll buy all those properties. I'm guaranteed that I'm going to buy them 10 now and stuff like that. And while talking to people and trying to get them to come and buy, because it was a good deal, it was returning about 21%. And so one guy said, but why don't you set up a fund rather than getting individual investors? Why don't you set up a fund, and just buy all the properties? That's a good idea, So I went on a fundraise, and then I managed to raise a 1.5 million rand, and just like that, I couldn't believe it. And then I bought all of them. That's how the fund started. But I never really paid my attention to it. With the returns, guys wanted to invest more money after seeing the returns, and then other people wanted to join. And I said, okay, fine, come join. I'll calculate the premium after a year, people will come join. So it's something that happened casually, and it so happened again that I got an opportunity to buy 55 properties. So I went on a fundraise again, and I managed to put those properties into the fund and manage. And in a way, that started my property management business. I've got a property management business now where I'm basically managing properties for individuals. If you want to invest in a CBD and you don't have the capacity to manage, I'll manage it for you. And then this fund, So it grew and grew and grew up to 8 million rand in 5 years. But the way we have set up the fund is that like we're gonna keep on reinvesting, for 5 years, and we're only gonna start paying dividends in 5 years time. So it grew to 8 million rand, a fund with 45 properties in it. It's 49 properties now. So it closed last year, and then we started paying. I paid my first dividends this year. But the guys are saying like I like the way the fund perform because we've doubled the investment. Okay, so anybody who put for 100,000, their investment is worth 200,000 in 5 years time because of reinvesting. And then the money we're generating, we're buying more and more and more and more properties. And then I said, look, it's a return that you can't get anywhere. I'm not aware of any such return in South Africa, the whole of South Africa. So they said, like, look, I don't want my dividends, I want to reinvest. But we had agreed that we're not going to reinvest anymore. We have to pay dividends. So half the people said, no, let's start another fund. So I've started another fund now. This one I want to make it a 10-year play, and I want to grow it aggressively, to 10 times the current fund to 100 million. So I'm busy inviting people to come and join the fund, and then we just invest in a CBD, and we making an impact there in a sense that we're making the buildings better. So I found buildings with no security, owing the COJ and stuff like that, and I get involved and I fix it. I put security, and all my buildings, people want to stay there because they can see that it's safe. It's a right environment. So it's part of my contribution in a way to fix the area and make it livable, for people. So yeah. So the second fund, second Masiba Msane, has been launched about a month ago, and I'm in a process of fundraising now to do the same thing for Masiba Msane.
That is amazing if you think about it, because it's not only about investing and growing your wealth portfolio, but to also make a bigger impact, like you said, to kind of uplift the community and the buildings and the security and all of that. So that's definitely something that, you add additional value to investors who want to get involved. So I am going to share Nqabenhle's details. So if you want to get in, talk to him about the funds and how you can get involved if you are interested, you're more than welcome to talk to him and discuss it further. But then you've mentioned now that you cannot get these returns anywhere else in South Africa. And you mentioned also earlier that you have invested in shares early on, but you couldn't really get a good return there. Do you actually invest in other asset types as well, or is it full out property for you?
I know that I should be investing in other asset classes, but then if you've got the money, you're going to get 20% return there on asset class, you're going to get 5%. It makes it difficult. It's been full on property, but I've made a conscious decision this year that I need to start, investing in other classes. I invested in Satrix for a long time, for 5 years. I did well there, but after 6 years, and I looked at the IRR, it was like 12%. I said, sure, had I put that money in property, I would have made way more, So I do have Satrix, I don't know how to do shares, so I tried and I've lost money, there I've made some money there, but it's like now you have to monitor it. I don't have time for that. I don't make an investment up front with property. That you make an investment up front, you forget about it. You know that it's just gonna keep on giving you the return that you know upfront. You can know how much you're gonna make upfront, which shares you don't know. You know, so the only share that I remember where I've made money was Capitec. You know, I bought Capitec, I think at 40 rand. You know, it went to 90, and I said, yo, within a short space of time, you know, I sold. And I forgot about it. And then I think about 5-6 months later, it was at 600. I nearly cried. I said, you see now, this thing is automatic and pain, you know. But as if it was my property investment, you know, I know it's going to be there. You know, so which shares there's a lot of hard gains, and so. But I want to get into it now. For a long term, I'm going to look for good stocks like Capitec, where you're going to invest and don't worry about the fluctuations and just leave it there. But ETFs as well. You know, I'm getting into it. That was just to diversify a little bit. But it's been mainly property for me.
Yeah, but I think it also proves that not everything works for everybody. You need to find what works for you, and if you found something that works for you and it works really well, then stick to it and go for it, because that and it's also about risk profiles and what you feel more comfortable with. And if you have good experiences, you do not really need to go into something else just because everybody else is investing in something. Then you have to be on the bandwagon as well. But you have shared so many good nuggets and lots of tips and advice to us. I think you must, maybe just the last question, if I have to ask you, you've been through like a long journey, a very successful journey. You've obviously learned a lot of lessons. What will be the bit of advice that you can give to other potential investors to help them to be more successful on their property journey?
I think the advice I'll give is that see property as a means to an end. Okay, so don't see it as an end in itself. Okay, for me, and I didn't get involved in property because of property. Okay, I had a bigger vision. I wanted financial freedom, and I was clear that I want to earn income passively. I don't want to get in any businesses that will require me time from me, and I have to be there and working and marketing and growing. It's not me. So and it was not property for the sake of property. It was a bigger vision. I was clear what I want to achieve for my life, and then property was helping me to achieve that objective. Whereas if you're just getting in property because you're hearing my story or hearing Ronel's story, and everybody is doing property, you also want to get into property, then you're not going to be successful. It's going to be a struggle. You're going to do bad deals, and then you're going to say people are lying. This property is not a good investment. I've seen that. I've started mentoring a few people, and I find one of my mentees got 5 properties, and those 5 properties done well. Seemingly she's done well, but all those 5 properties are taking 20 grand away from her, on a monthly basis. She's not having a quality of life that she can have because of these property burdens. So we're busy unwinding that and getting rid of all these properties now, and we're struggling to get the value. And then the prices, she's trying to get the one of them has been listed for the past 4 months, getting buyers, and she just bought it. She recently bought it. It's the last property that she got. She overpaid for it, and then it's taking money away from her. So you end up doing those mistakes. Whereas if you've got a bigger vision, that you need to make money from property, we're not going to do a deal that's going to take money from you. So if I was busy buying such properties that I have to put in money on a monthly basis, they're not leading me to my bigger vision. I might have properties, but it's going to be a source of pain, than a source of pleasure. So you must do it having created a bigger vision. Know where you want to go with your life. Get the wheel of life, map it. What do I want from my family? What do I want from my career? What do I want from spiritually and all those things? Have an idea of where you're going. So, okay, fine. How do I fit property? Then you're going to be more successful. You're going to be clear what is it that you want, and you can determine the number. So for me, I knew that I needed 30 properties. Those properties were going to help me to get financial freedom at the time. And then it helps you to do the right deals, and you get the drive. The discipline become much easier, if you've got the bigger vision than just to focus on the property for the sake of property.
That was such great advice, and I want to thank you for joining us today. Thank you for sharing your journey and giving us some tips and advice on how we can also go about it. I'm sure that you will catch up on Richard Branson with his 400 companies. You will have your 400 properties soon. And I want to wish you well in your journey further, that you really achieve success, and that you do achieve that bigger vision that you have envisaged for your life. So thank you for joining us today. To the viewers, I hope you've really learned a lot from his amazing journey, and that it can also inspire you to start with your journey towards that, whatever your bigger vision might be, but start taking that first small step to achieve your goals and your vision in life. Just want to remind you again, please go and subscribe to the channel, and also go to the description field where I will share the details to get in touch with Nqabenhle. But there's also a link for our monthly giveaway competition where you can win one of my books, Financially Fit and Wealthy. So go and subscribe. I hope you've enjoyed it. If you have any comments or questions, please give it to us in the comment section, and then I will see you again at the next Ronel Talks Money show.